Hello, I'm Steven, the calculator guy, and today we're going to talk about Solend. And this is going to be part of my stablecoin series, because I want to help people prepare for what may be an upcoming bear run. Now, I don't know when the bear run is going to start. I don't know if it's going to start, but I want you to have tools available to you if it does start. And so this is just one of many, many tools. I've done Anchor, I've done Delta Neutral with Mirror, I've even done the degen box, and you can look up all of those on my channel. And I'll make a sheet eventually, and I'll have links to all those videos and maybe even like text tutorials. It's going to take me a while to do that, and it's probably going to be a Patreon exclusive, but all the videos are there. So all the videos will be for the public, because I think that being able to get yields on stablecoins is something that everyone should have access to. So I'm going to make all of the stablecoin videos public. I'm not going to hide any of those on Patreon. So this is just one of many strategies. I was looking for one where I could loop, sort of like you would do with the degen box, but that actually had some liquidity, or actually had some available to borrow. So I ended up on Solend. I looked at I looked at Pi, I looked at Abracadabra, and none of those had consistent vaults or cauldrons to borrow from. So I ended up on Solend. So Solend is a borrowing and lending platform. It is run completely by anonymous teams, or by non-doxed pseudonymous teams. If you go to the About, you'll see their team is right here. You have Oxrooter, Oxnope, Oxodia, Deshishwan, and Oxcactus. So take that for what you will. The investors are, the sort of what you'd expect. Some of the big investors in DeFi, and some of the big investors in like money markets and lending and borrowing. So that sort of bodes well. The platform has been going for a while. You can see there's over $1 billion applied and over, nearly $500 million borrowed. So use that to guide your vote of confidence. It doesn't mean it's a safe protocol. It just means that a lot of people have trusted their money in this protocol. All right. So what strategy am I looking at? And actually, I'm currently utilizing this strategy because I had some money left over from another chain. I moved it over to Solana. I was looking for an opportunity to do some stable farming, just to sort of get into the mindset, get ready for whatever bear run may come. And I think, I know this was the place that I was going to use. So this is what I did. I looked at which supply APR was the highest for stablecoins, and in this case it was USDC. And then I looked at which stablecoin had the lowest borrow rate, which is USDT. So what I am doing is I am borrowing USDC. Sorry, I am supplying or collateralizing, I guess, USDC, but I'm borrowing USDT. Now you could easily loop USDC, but you're paying a slightly higher APY, and that's going to reduce your total APY in terms of what you're getting. So we can make a pretty easy calculator for this. I've technically already made one, so if anyone was looking to see how this is made, I apologize. I got too excited and I made one while I was doing this strategy. So basically what you have here, let me just do this. I did try to do dark mode because that was requested, but it doesn't make the cells darker, so I apologize for those who are still going to blind their eyes. This is just your inputs. Okay, that's weird that it turns into dark mode temporarily. Maybe I need to refresh this, who knows. So let's just put a nice wrapper around that. I want that. Dark mode is kind of cool, I'll give you that. And then I want to make this, ooh, I like how that looks. Okay, so we have inputs, and usually my inputs, if you know me, are blue. So I'm just going to go ahead and do blue. And there we go, right? And so these are all going to be outputs. Usually my outputs are green. Just sort of what I do. And then we'll call this loops. So that should also be green. So basically what we have here is I initially supplied $635. It technically was $635 and 62 cents, right? The LTV, which is what I'm borrowing, is 75%. So I can borrow 75% against my collateral. That's super simple, right? The supply APY is 10.82. Now, is that still true? Let's see. Let me just attach it over here. It is 10.52. So going down by a second. I don't like that. And the borrow APY is 3.05. That's what it was. Now it's 3.08. So that's going up. The one's going down. Come on. These are both going in the opposite direction. So hopefully these flux the other way. I don't like that they're going the way that makes me less money. I'd rather them go the ways that makes me more money. But take that for what it's worth. A lot of these opportunities slowly diminish over time because as more investors jump into them, that's just the way the cookie crumbles. So if you get into like yield farming and you're looking at a really juicy APY, just understand that APY is going to go away. And if there's a deposit fee, you're going to have to, wait that deposit fee out before making money. A lot of times you're not going to look at those ridiculous gains. You're going to look at making, I don't know, a few, maybe 10% in like a month, 2 months, but that adds up if you're smart about it. If you're patient, which is difficult to be in DeFi, where everything feels like it's going a million miles a minute and you always want to jump on the newest thing. Anyways, so here with the first applying, I get the basic numbers. I can borrow 476 against it. So if I'm not looping that back in, my net APY is 8.21% because I'm paying that 3%. I'm getting that 10.52%, but that 3% is getting paid on the borrow total. So you can't just take the 10% and subtract the 3.08% because I'm getting 10% APY on the 635, but I'm paying 3% APY on the borrowed 75%, which is 476. So anyways, I think I've looped mine. It's a hassle to loop. I'll show you how to do it in a second. But I think I looped mine, I don't know, 6 times. So I'm looking at like a 28% net APY, which is better than Anchor. But, we'll see if these stay stable. Anchor is the go-to. It's like the standard, right? If you can consistently be Anchor, you're doing something amazing. So it's like the S&P 500. A good stable protocol has to beat Anchor the same way like a good day trader, good investor wants to beat the S&P 500. So we'll see how long this lasts, but I've done a few loops. It seems like we're maxing out around 33%, 32.8%, but that's like 30 loops, and there's no way I'm going to do 30 loops. We hit 32 at 12 loops. I might do 12 loops, like if I'm just bored for 20 minutes. I just feel like looping this. Okay, so let's go back to Solend and see what's going on over there. So, and remember, 30% APY on stables is great. You just have to monitor it because this is DeFi. We don't know how long these protocols are going to last, even though Solend does, it's reputable within its own space. So, how did I do this? Let me connect. First, you have to connect your wallet. You can see that I am currently, I've done a total supply of 2083, so it looks like we're on loop, probably loop 5. I've borrowed a total of 1449, so that's a little off. Looks like we're probably here actually. I guess there's like some slippage fees, but what I've realized is I'm actually getting really good rates on my USDC to USDT. So I can borrow some more of this right now. Yeah, so I haven't completed the loop. So I can borrow some more of this. I'm going to do that. This is why. I will approve this transaction. Done. So I've borrowed 112. Now, where I'm going to go is we've talked about this before, I'm going to go to the open ocean equivalent on Solana, which is Jupiter, the Jupiter aggregator. Because it's going to find me the best rate to swap USDT for USDC, because I want to deposit into the one with the highest APY. So I go over to Jupiter. I'm going to, I like this in dark mode. I'm going to refresh, which is the magical function of DeFi, and connect my wallet. Phantom. Okay, cool. So it tells me I have this amount. I'm going to max that. And what you'll notice is that, look at that. Isn't that beautiful? I actually had it a few times earlier today where I was getting more. I was getting more USDC than I was paying in USDT. So I guess, this isn't as good because I'm getting slightly less. I'm getting 0.03 less, and I'm cool with that. Totally fine with that. So I'm going to go ahead and swap. I literally had like $1 more earlier today, which I know, just $1, but like when you arbitrage something, it just feels good. It feels nice to incidentally arbitrage. Okay, so it's Solana, so of course it swaps super fast. So I go over back to Solend and I refresh because refreshing just makes the world go round. And then I go over to USDC to recollateralize, right? You're continuing the loop. So at this point, for the record, I have simply borrowed and I have not recollateralized. So now I'm probably here, with the 1567. Let's see how close I am to that. Connect wallet. 1561. Okay, so really, really close. The calculators are never perfect because there's like slippage that exists in different places where you wouldn't really imagine, but it's close enough to where I can look at these calculations and actually see what my APY is. These are like rough estimates plus or minus 1%. So I go back here and then I supply that, right? I purchase USDC, now I can recollateralize it. What that's going to do, it's going to lower my liquidation threshold, which I love. I fully trust, I know people, I shouldn't say that. I know that people are not super trusting of USDT, but they have never, to my knowledge, failed to pay people who have tried to redeem USDT for USD. Now, if everyone tried to do that at once, of course they would fail. I think most of these protocols would fail, except for, interestingly, things like Meme, DAI, and MAI, which use collateral to back every single minted stablecoin, which some people think is like not a good way to have stablecoins. I think it's the best way. Well, you know what? I don't know enough. I'm not going to act like the expert on that, but they're backed. Every single dollar is backed. Okay, so supply, confirm. And that's a loop. So this is how I would loop, and I would do this continuously over and over and over again. You'll notice that if I refresh again, my liquidation price has gone down a little bit. And let's actually talk about that so that you sort of understand what's happening. So my liquidation threshold is 1756, which means that if my assets supplied, if my USDC becomes valuated at 1756, I will be liquidated. So somehow USDC would have to depeg and lose value down to where 2,195 USDC coins becomes valued at $1,756 in order for me to get liquidated. Now, I am completely fine with taking that risk. If USDC depegs, there's a whole bunch of problems that are going to be happening in the world of cryptocurrency aside from just this. If USDC depegs, like, crypto is going to have a really bad day. So I'm pretty confident. USDC is like, I don't know which number of stablecoin it is, but it's like top 2. It may even be number 1, but that could be USDT because USDT has been around longer. Anyways, this is sort of the process. And so now, where are we? I have now supplied. So let's just look at this, right? I have supplied 2195 and I have borrowed 1561. You want to end on a supply. You don't want to end on a borrow. If you end on a borrow, you're simply increasing the amount that you're paying, that 3.05%. So I'm ending on a supply. I've just supplied new collateral. That's when I want to stop. That should be the end of your loop. Now technically my calculator doesn't reflect that yet, but I could make it do that. Okay, so that's sort of the end of the video. I'm going to go back and change my calculator to make it reflect the loops the way that they should be, because that way it'll better reflect the strategy that you should implement. So you can stop watching now if you're not interested in that. If you want to watch me do that, by all means. I will remind you that all of these calculators will be put on the Patreon but I do want to make all these strategies public for anyone. So yesterday I did a video on looping with my finance, and I did the calculator sort of live, and I want to show you sort of the semi-finished product. So later that day I sort of finished it out and did a looping calculator where you can enter any of these inputs and you'll get these sort of spit out. So one of the ones I was looking at was the Mubu ETH Phantom pair that they have on Beefy that has like a 50% APY. And the parent asset is the Phantom ETH liquidity pool token. Now, I don't really know what that was worth, so I threw in some dummy data, but I do know that it did have a 33% liquidation buffer, so I was totally comfortable with if I wanted to do that, right? I don't think that Phantom and ETH will be such that they will both lose 33%. But if they do, I think I can catch it. Anyways, that's not the point. The point is that this thing is built out, and you can do this with a number of different assets that you might use for my finance or Pi finance or other things like this, where you're sort of getting these interest-bearing tokens and using them as collateral. And I really like this because the APY can go up to nearly 100% on this pair, and that's without doing much aside from self-leveraging it. And you don't have to pay a leveraging fee, which is cool. So anyways, I built it out. It's on the Patreon. I'm also gonna put this one on the Patreon after I make it a little bit nicer. Let's fix it, right? So I think that loop 1 should actually, no, not a row. I want to move these cells down. Insert cells. Yeah. Okay. So I think the real first one should be this plus that, which is this, and then the borrow should be the same. Yeah. No, the borrow should be the same. Yeah. Okay. Well, what I can do is just times 75%. That'll give me the right number. Okay, and the borrow total, I can technically use, at this point it literally is that. All these are fine. So supply APY should actually be, yes, because that's on this. Perfect. The borrow APY should be 3.0%. Yes, that's right, because I've only borrowed on that. Okay. But the net APY, nah, not right. Okay. So the net APY should be, well, let me get this first. Let me take this and go up 103. So if I take this and go up 16%, that looks righter. Yeah, okay. So now I want the borrow total for every other row to sort of reflect that. Oh yeah. Okay, so this is actually going to be this plus what I'm going to borrow this round. Okay. And then my borrow total should not account for this, which I'm going to sort of bar. And it should be equals sum, not G3, but G4. Okay, so that's right. So what this is doing here is it's taking the sum of everything that I borrowed, so these two numbers. That's what I want. And it's taking them until G5. And if I move this down, it's going to change the G5 number to reflect how low we are. So if I go all the way down, cool. Just say G7, G9, whatever. All right. So this new formula, which is F4 plus G5, that's what I want, because then the loop ends on collateralizing. Take that down. So that's right. This is right. Each one of these is 75% of the one above it. That's good. Borrow total is the addition of all of those into that point. That's right. The supply APY, look at this formula again. So in this case, it's F4 multiplied by supply APY, correct, divided by the initial. Yes, that is correct. Okay, borrow APY should be H5 times the borrow APY, which will tell me how much I have to pay, and then divide that by the original borrow. Yes, that is correct. Net APY should be what you make per year, correct, divided by your initial. Yes, okay, so all of this is correct. That makes me much happier. So now this calculator reflects ending on the collateralization instead of ending on the borrow. Now, I am so sorry for taking so long in this video. If you watched all the way to the end, thank you. I don't know why you did, but I really appreciate it. So this calculator will be available on the Patreon. I try to make it worth it in that space, but again, all the strategies I am going to make public. I'm not going to have any private stablecoin strategies because I just don't think that would be cool. And I want DeFi to have stablecoin strategies in the event of a bear market. I'm not saying there's a bear market coming. I'm just saying in the event of a bear market, I want everyone to be, I want everyone to have tools. So thank you guys so much for watching. Sorry for the long video. Have a wonderful rest of your night.